Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Thursday, the 9th of June. Starting off with the FTSE 100 and clearance of the 6,300 level appreciated. Cautiously optimistic now on the upside scenario, especially while there's no end of day close back below the 50-day moving average at 62.18. Target here is high as 66 or 6,700, which seems like pie in the sky at the moment, and therefore you probably want to go for a 64, 64.50 initially over the next couple of weeks, but the top of that trend channel from January is a valid destination on a technical basis. Back onto the DAX, which had a very strong start to the week with a gap through the 200-day moving average, the second one in a month, which is a very, very strong signal. That's the black line there, just around the 10,100 level. The view at the moment is while there's no break back below 10,100, we're looking for a likely break of this main resistance line from November to give us a retest of the 10,500 zone. Above that, things could get quite strong indeed, in the sense that we're looking for 11,000, but taking it one step at a time. 10,500 while we hold above the 200-day moving average, and that could be seen over the next couple of weeks. Onto the US markets, and here it's been a solid picture for the Dow. Really, 17,900 was the level to break, which was this red resistance line from April. That's been done relatively easily, and while we're above the 50-day moving average at 17,779 rather, the top of this January price channel at 19,000 should be on the cards over the next month or so. Going on to the S&P, similarly strong picture here, holding well above the 2100 level, heading for the 2250 zone, which is the top of this rising February price channel, while there's no break back below the 10-day moving average at 2102. Onto the Nasdaq, and similar bullishness, perhaps not quite of the same strength now as the S&P, are tailing off a little bit. But most of the near-term moving averages rising. Even all the near-term moving averages are now rising, with the 200-day moving average at 4403 starting to tick up as well. That leads us to conclude that especially while there's no break back below that 4480 low of Friday in the wake of the non-farms, we are heading up to 4800 for this market. Only back below the 50-day moving average at 4447 really delays or questions the bullishness here. Onto the currencies, and still with the same picture at cable, 143.50 regarded as the Brexit line. Below that, we're heading for a Brexit. Above it, we are remaining. So a range between 143.50 and 147.50, and you can really take your pick in terms of trading and how to go about trading that range at the moment. Euro dollar, the strong, decent recovery here, in the sense that we were looking at this consolidation since last Friday as a bull flag, mid-move consolidation, and heading for a retest of May resistance through 116. That target's valid while there's no end of day close back below the 50-day moving average at 113.16. Onto dollar yen, and surprisingly right back at the bottom of this wedge formation here. 106.50 is the level in question there for this February support line. Aggressive traders will be buying versus that feature, looking for a return to 110. Otherwise, wait to see whether there's a final probe back towards 105.55 before going long, just in case the scenario is of a wedge which is slightly wider than the one I drew before. But it looks as though this market's seen that particular line and will bounce from there. Finishing off with gold, which could be argued to be the star play at the moment, broken through the 50-day moving average of 1247, while above that we're looking for $1,300 as a retest of May resistance, and as high as 1350 for the end of next month, given the current decent progress that we're seeing. That's it for me. More updates at the same time tomorrow.